Welcome back to Mortgage 101, your guide to homeownership with Clinton Wilkins, myself, Todd Vino, right here on News 95.7. What were we talking about?
We were talking about
Credit, wasn't it?
Yeah, and that's one of the biggest myths.
It is a huge myth, right?
It's a huge myth that credit's either good, bad, ugly forever. You know, one small blip can make a difference, but is it the end of the absolute world? Not necessarily. And there's lots of really good things you can do with credit. And I mean, we talked a little bit about it earlier in the show. But one of the big things that you can't change is making your payments on time. So it's really easy, Todd.
Yes.
Just do it. And sometimes it's the smallest little things that people forget about.
Such as?
That $10 minimum payment on a credit card. That happens. And sometimes I find people are like, well, I don't really use that credit card. But there's, an automatic payment that shows up that once a year thing. And then they forget. And you don't look.
It's the fee, right?
It's the fee. That happens a lot.
That happens a lot. Yeah.
That's why if you're really not going to use the credit card,
get rid of it.
Yeah.
That said, though, might it be prudent to have, because if you need to get your hand on some money and you've got if you can get $35,000 on a credit card sitting there and you absolutely have to have it, it's nice to have it there, right? For just the sake of $100 a year to service it.
Well, I mean, I think there's like an adage that says, it's a lot harder to get credit when you need it.
Exactly. And I'll give you a direct example of this exact scenario. Shall I?
Yeah, tell us.
Okay, I've got a line of credit with Scotiabank.
Mm-hmm.
I've actually got a line of credit with RBC, which is zero balance on. The Scotiabank has a line of credit because I've used it to fix up my house,
right,
which I'm going to be dealing with when we remortgage, right? The appraisal, whatever. But they also sent me a $35,000 credit card, and it's the interest is it's not a low interest credit card, but I'm not carrying a balance on it. But there are some incentives to it. But in order to keep the credit card a year, it costs me $100. It bills once a year, like you said.
Mm-hmm.
And I've decided to spend that $100 every year just to keep that credit in case hell hit the fan and I needed $35,000.
And you know what? That $35,000 will probably keep you going for a while. Or guess what? If something major happened to your house, it probably wouldn't be ideal to put it on a credit card.
But it's better than the alternative.
You have the available credit.
Right. Yeah.
And people will come to me in a pinch. Like, I helped a young couple who bought a house a couple of years ago. Luckily, they were in a position with the equity to be able to refinance. But they need a new heating system for their house.
Yeah.
And guess what? We're right around the time that we're going to have to start turning on some heat.
Mm-hmm.
Or if we, some of us probably already have turned on some heat already, right? And they didn't have the available credit and they didn't have the cash. Could they have gone to apply for a line of credit or something? Maybe. But it was just as easy for them to do a refinance, and we actually got them into a better mortgage product than they had already. Mm-hmm. And, we were able to refinance their home up to 80% of the market value. And obviously with the price, the value increases and the amount that they paid it down the last few years, they were in a position that they could get the equity out that they needed. And guess what? It's saving them from maybe getting a higher interest line of credit or maybe a loan. And they were actually offered a loan for like 9%.
Yeah. From who? Not specific.
I don't know.
But
I don't know. I don't know who was the credit grantor, but
right,
it was like a loan to put in a new heating system.
Right. Yeah.
And, here's the thing in Nova Scotia. You need to have a safe place over your head. And I know we've obviously talked about that quite a bit. But you need to be able to have heat. And that's one of those, core things that you need in a home. And you can probably deal without a furnace, in the spring and summer. But for the fall and, obviously going into the winter, you need to make sure that you have a reliable heating source.
What are your thoughts on people? They get into houses and they sign these deals with these leases on heat pumps and things like that. That can be problematic when you're trying to sell, or can it not?
Yeah, because some of it's lease.
Exactly
and,
what I mean.
Buyers don't always want to assume a lease from a seller of a property because it's like another payment. Mm-hmm. I've seen leased furnaces and leased hot water tanks and leased, propane tanks. That's actually, there's no option but to lease it. But there's certainly leased equipment that can be involved, and it's not for everybody because it's going to increase that housing cost. And I've actually seen recently some purchase agreements where the buyer's like, I'll pay your price for your house, but part of the deal is that the heat pump lease or loan or whatever will be paid out as part of the closing, so they wouldn't then have a payment.
Right.
And I think that's a good way to do it.
Well, it is, but it's going to cost you money when you're selling.
It's going to cost the seller, in this case, they probably got a little bit of a higher price for their house, but they had to pay out this loan.
Had to pay out the loan, right?
And the loan was paid out of the sale proceeds, so it wasn't like the seller
Wasn't a
had to
huge
cough
deal,
it up.
Right, but the bottom line is think before you do these things that this is going to be at play, right?
Yeah, exactly. And I mean, it's another payment. And, sometimes death by 1,000 slashes. And you may not think it's, a huge payment, and maybe it is a small payment, but sometimes it's a payment over a really long time. And, it's just like an extra expense that you might not need to really take on. So if you have a different avenue for financing an improvement like that, I think you should take it.
But back to credit scores not being perfect, but you do need to have good credit in order to lease these types of products, right?
I would say by and large, yeah.
Yeah, by and large, yeah. So I know that you're downplaying. You're saying that it's a myth that you need perfect credit, and if you don't, it's the end of the world, and you're not going to be able to maneuver it all. But goodness gracious, do everything you can to protect your credit score. It's going to make your life a heck of a lot easier.
It will be a lot easier if you do have a great score.
Yeah.
I will agree with you, Todd.
Yeah.
Is it the end of the world if you don't? No, because there always is a workaround. But and there's some things that are unavoidable. Situations happen.
Yeah, that's right. Like
Health,
job loss,
health, matrimonial breakdown. These things happen every day.
Yeah.
But, if you have some money in the bank or if you have access to credit, you should be able to hopefully get through that. I think when you're really close to the wind already, one small incident can be catastrophic.
Yeah.
And, sometimes it can be a slippery slope. I see people that have like 10 and 12 revolving credit facilities. It's like, why do you need that many?
Mm-hmm.
But I do agree, Todd, like having that credit card that you have as a backup, probably a great plan. But it's not for everyone because some people can't manage.
They can't manage it. They can't. That's right. But
and
if
then
you
guess
can,
what? Then they're going to
it.
be in to see me. And they're going to be in a situation where, I have clients that we've, done 3, 4, 5, 6 refinances for them over the last like 10, 15 years. And, they're refinancing every so often. But eventually we'll get to a position that they just can't refinance anymore.
Yeah. Then what?
Then guess what? They're just going to have to hunker down and start paying it back. You can't just use your home as a constant ATM.
Yeah.
Yeah, I think there's nothing wrong with a refi. We're in the business of mortgage lending. I want to do refinances, but it needs to be an educated decision, and we just won't refinance someone for a refinance sake. There needs to be a positive outcome, and really, we need to make sure that our client's going to be in a better financial position from that refinance.
You don't want to be 60 whatever years old and saying, my goodness gracious, we've refinanced this property 5 or 6 times. We have a ton left to pay on it. We don't have the equity in it. Mm-hmm. It could be part of our retirement plan, but it's not now because we wanted to do extra cruises and extra trips.
Yeah, and I see those people. Some of these are my clients, and some of them are new clients coming in the door. And my advice changes at some point. I'm usually hammer it down before retirement. Mm-hmm. But that's not always possible. And when clients come in and they're preparing to retire but haven't retired yet, Todd, I sometimes have a conversation with them about either changing the product that they're in, maybe changing it from a mortgage into a home equity line of credit, or sometimes what we do is we do a refinance and we extend that amortization back to 25 or 30 years to bring the payment down as far as we can. Because you and I both know in retirement, there's less disposable income, probably.
Yeah.
And chances are, in retirement, you might have more chance to spend some money. So if you're not going to get it paid down before retirement, you might as well just extend it over a long period of time. Yeah. And then you're not renting, you're still owning, you're still paying it down, but maybe you're paying it down more slowly. And maybe it's cheaper to still own that home than it is to rent. And we know the situation with rentals is probably as heated or more than it is for borrowers and buyers trying to buy properties.
Yeah. Speaking of properties, investment properties, pretty complex. Is that a myth that it's too complex in order to pull that together?
Not necessarily.
Well,
Through our channel, we finance residential rental properties up to 4 units.
yeah.
And we usually will have borrowers with a maximum cap of 5 or 6 properties, but they can have up to 4 units per property. So you can build yourself a pretty good, healthy portfolio in your personal name. And we have buyers and borrowers that, will buy a property and they'll fix it up and rent it up, and then we'll do a refinance, and maybe then that enables them to buy another property. And, we have these conversations with customers every day. And it's exciting. It's nice building that net worth. And I think some people are doing it as retirement projects these days.
Yeah,
It's good.
absolutely.
If you have a lot of equity in your home and you can leverage the home to make the down payment for the rental property, it can be a great solution.
It's not for everybody, though.
And it can be a good project too, going into retirement. But
It
again,
can be, but some people retiring, the last thing they would want would be to deal with that headache, right?
it really takes, I think, a special person that wants to own rental properties. You have to have some compassion, and you also have to have a little bit of thick skin.
Yeah.
To be honest, things go wrong. They go wrong, if you own your principal residence, but they can certainly go wrong if you own a rental property as well.
Plus, you got to know what it's like to deal with people, like you said, who are renters, they're not satisfied, unhappy customers, because those are your customers. When you have tenants, they're your customers.
Yeah, and guess what? If your customer doesn't pay, that could really negatively impact your personal finances,
That's
right?
Yeah.
And that is certainly a risk that you need to think about when you're doing a rental property. Todd, have you ever rented a property to anybody?
I have, yeah.
Yeah, and
I had a 2-unit in St. John.
And did you live in one unit and rent out the other, or they were both a rental?
They were both rental, yeah.
Okay.
And it's a tough business just even with 2 units to be in.
Because you had a full-time job.
I had a full-time job to try, and you're always getting calls. There was a shared driveway. They were fighting about that. It was just like children almost. Not to dissuade people from from doing this.
But it's not for everyone. And I think you need to think about things like that. Do you want to get the call about fighting about where people are parking?
And they will.
And they will. And I think they'll fight about anything. And, even like the best tenants ever still may not be a dream. But yet the ones that maybe you think are going to be really annoying are just like so good.
Yeah.
There's a lot of false positives and false negatives, I think, when it comes to managing a rental property. And it certainly is for a lot of people, but it's not for everyone. I've owned rentals, and, sometimes it's gone well and sometimes it hasn't. Personally, today, I don't have any, but I have had. And the last tenant that I had actually moved out at the end of August. And, the tenant was really good at paying, but really demanding on maybe some other things. But I had a property manager, so they took care of things. But I still, was involved, as one would. You want to make sure that the asset's going to be protected.
All right. We have one more segment left, and we'll find out what we're going to talk about. We'll be back here on News 95.7.